Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday, and we're here at the 7th of February, 2022. Pretty interesting day. You were up most of the day in the stock market. At the end of the day, a tailspun. Market basically unchanged, not too far from there. We're looking at energies that were down today. There's talk that the U.S. is trying to do things to make the Iranian treaty talks, which kick off again tomorrow, more palatable. But short of the U.S., and I pray he doesn't do this, short of President Biden just giving in and removing all the sanctions, the Iranians said that's the only thing they'll accept. They don't trust us. And they want that. And then they want for a short period of time to see that all those stay removed. Okay. If the president does that, I would guess his term's over. I mean, that's a non-starter. Can you imagine the American backlash on that? Israel's backlash. Europe would probably love it, but I don't think it would sell well at home. But that's me. Other people might think, nah, they're good people, the Iranians, the regime is great. I think the people are good. I have Iranian friends that I've known for years that come here. I've met families, they're great. It's, I think, the government that's the issue. In any case, not everybody's good for everything. We know that too in people. In any case, if you look at the bonds and notes, we still see interest rates creeping. It was interesting today to see J.P. Morgan saying that they're thinking that this wave of this increase, it's in the marketplace and stocks are attractive. I was reading the article on that. Gold market sticking its head back over the 1820 level. That's a positive in the marketplace. Dollar still staying in the low 95.5 zone, and the euro backing away from the 115 area. So let's go to the charts and see what this all means. When you look at a weekly area chart of closes, we've started off the week and we're still down about 0.1% for the week. You can see the action here is one of the market trying to consolidate what's going on. I mean, you did have a market that went from 4,800 to basically just over 4,200, climbed its way back up in the past 2 weeks, and now you're into an area where it's trying to consolidate. If you look at the pattern on the chart, temporarily it's what? Well, temporarily it's bullish in that you have higher lows and higher highs. You have an inside day so far, so I don't know if this will turn out to be a pattern of lower highs with the higher lows or not. You can't tell from that. What I can tell is that the market found its resistance between the 18 and the 100-day averages. It's fallen back, and if it breaks from here, I would look for support at 44.28, which is the 200-day moving average of closes. In terms of the Bollinger Bands, they have a ways to go to narrow in even more. But the longer the market goes sideways, the quicker they'll cave in on the market. Momentum up, bias up, because you're over the 18-day average of closes as we're talking, and trend up. The risk associated with being long, should the market get under 44.38.5, you break the up pattern and you're right into the support of the 200-day average. If that gives ground, then you open up the door for wherever the lower Bollinger Band is. The NASDAQ's very similar. These markets rallied up to the combination a week ago or so of the 200-day average and the 18, and they ran into a brick wall against those numbers. So that was your bounce. Now you're in something of a consolidation, and just like in the S&P, the question is, what next? If the market takes out this 14,362.75, watch out. The next number could be the 13,854. Conversely, you have to start closing over these numbers to get more bullish. So I viewed this as a rally in a bear market that was a corrective rally, but overall the market still has selling pressure on it. The Dow is just neutral as can be right here. You have the trend up, the bias up, but you're caught between these two moving averages again, the 200, the 18, and the 100, and sort of in the middle of no man's land. It resolves itself to the downside should prices get underneath 34,668. Why? That could give you lower highs, lower low. What about to the upside? Well, you got to be able to stay over the 200-day average, which so far you haven't been able to do. Do that, and I'll get more excited on that side. Still, the weakest of the group has been the Russell. It can't even get up to the 18-day average. Momentum is up. The trend is up as measured by the swing line, but the bias is down. Therefore, I call it a rally in an overall bearish market at this point. In the VIX cash, here's the part of the puzzle that you got to also look at. You're getting oversold. So you have a downtrend, but if the market now takes out 26.26 on this pattern, you could end up with higher lows, a higher high, bearish the stock market, and the market starts turning up from there. Let's take the other side of the story. You're currently in a bear trend. Are you going to be able to get very much through 2046 to 1920? If you do, you're almost saying to the stock market, hey, we're coming down enough, we're going to clear that. Maybe we're headed into the 1670 level. Well, that should mean then the stock market's roaring to the upside. That's why all the parts of the puzzle, I'm understanding what they are, but the market's got to tell me which one of those are going to activate where. In the bond market, a bit too oversold now. So you have a market with a higher high, lower low, pushing on the lower Bollinger Band to make it go out. There's nothing bullish on this chart, but if you get short here, where do you put a stop? That's your biggest question. 10-year note is in a downtrend, riding the band. It's a different story than the third year, pushing on this band in an oversold condition. It either embeds or you'll get a spin away from this just because you got to correct an oversold condition. I think the pros are waiting to get short towards the 18-day average, but I don't think you're going to attract fund selling when you're that oversold in the market. You have a lot of data coming out later in the week that maybe gives us an edge as to what the market will do. In the dollar index, I always look to see how did the 100-day or whatever average the market's hitting recently hold up. Certainly held up well there. As we come back here, it didn't even try to hit the market back there, and it's just hit the 200-day again. The 100, I keep saying 200. The 100-day again. Is that going to be enough to offer some support to the market is really going to be the biggest question. And you're oversold. So I think trying to get short down here, very difficult. Oversold condition often doesn't attract new short money. In the eurocurrency, it'll be the flip-flop. Here you are at the 100-day average on the upside, and you're overbought in an uptrend. Hard to get real bullish on that from that point. Then we get to the British pound, and it looks as though there could be a no confidence vote coming up right away on Boris Johnson. So if he were to lose that vote, then what the heck happens? So this market's sort of caught in no man's land, rightly so. At the 100 and the 18-day average of close is about as neutral as you can get on a chart at this point, but a close back over the 18-day average tilts this bullish. Then I join into the camp, so any close over 135.39, which is 7 ticks from here, I join the bull camp in that market. Bitcoin, we have been owed for the longest period of time since you lost the embedded reading here, a test of the 18-day average of closes since you lost the embedded reading. And it's finally got there. Got there on Friday. You're getting more follow through. You could get to that upper Bollinger Band. You've been down so much, why not? The market is out of its downtrend. I think you're going to get the support of traders that say, that selling spree is over, and maybe that was it. And they might be right. So I certainly am not interested in an overbought market that's approaching a Bollinger Band, but I can see the argument for friendliness. April Brent versus WTI just continues to sink down. Maybe it'll test this old 265, 266 level. You're fighting at the upper band, as I said. The news today that was pulling on the market a bit was this news that tomorrow the U.S. has made certain concessions to let for civilian use of nuclear power. How the Biden administration is going to be able to monitor that in Iran is beyond me. But to allow certain of the countries that want to be in the treaty with Iran to do that and not face U.S. sanctions with some restrictions on it. But it's a movement. Immediately, the Iranians said it's not enough. So I don't know where you go with it, but the U.S. did make a move. WTI crude, again, you hit the upper band, but on breaks, I think you'll attract the buyers in the market. Remember, we get the API numbers tomorrow at 3:30. Heating oil, I think that the pros took money off the table here. I'd be very careful. I don't think I'd be too aggressive to want to buy this market on a break tomorrow. You're losing the embedded reading. If you lose it, then you're opening the door possibly to get back to the 270 level, about 13 cents lower. And nat gas has been a son of a gun to even try to get a handle on ever since you came out of this narrowness. Right here, this is what created all that to the upside. Now the big question is, what next? Everybody's nat gas is going to be in demand if President Putin decides to invade the Ukraine. I mean, the U.S. met with today the Germans, as you saw. Nothing was said. Nord Stream 2, did you watch the questions during the question and answer period on it? You talk about politicians. Neither of them answered what's going to happen with Nord Stream 2. They said whatever they do, they are unified in their decisions. But they wouldn't answer, are they going to shut it off? Would they do this? Because at the end of the day, Germany, no matter what, wants that energy coming through that. So, again, we're going to have the live webinar this coming Thursday. I open it at 12:15 p.m. Central Time. It's free to get in it. If you didn't get my invite in the mail, in the email, just take your cursor, move it up here. When you do so, you will see an icon appear. Click on it, fill it out. If you have questions that you want me to cover, my email address is in there. Tell me what you want me to cover. I'll get it all set up so that we whip through. It's 20 fast minutes that we have fun with. I'll answer the questions as they're coming in. I'll bring up the charts that I've prepared for you ahead of time. You'll be shocked how fast it goes. I do not post it on the website. You either attend it or you don't get to see it. It's that simple, and it fills up, folks. So I'd advise you to register fairly fast. I'm Ira Epstein. You have a good evening. I'll see you all tomorrow.